Okay, hello.
Yes, hello.
Yes, so yes, where you from? You from India? Which part?
Yeah, and my name is Abhinav. I'm from India and I've just joined UK University for Accounting and Finance.
Okay, brilliant. Are you working as an accounts?
I'm sorry, I didn't get that.
Do you work as well?
No, I don't. I have some work experience in Paris, but it's more of in the textile industry with my father's business. So not so much into the accounting and finance business area.
Okay, and what sort of qualification you have before? Have you learned anything in accounts before?
Yes, I have learned most of financial reporting because I have my diploma from ACCA UK. Have you heard of it?
It mean you done the CAT. CAT is a certificate in accounting and
Yeah, yeah.
ACCA,
So
yes?
so I have attempted financial reporting in ACCA. So some of the concepts here is quite familiar to me, but not all. I've gone through the syllabus.
Okay, brilliant. Nice to hear. My name is Anjum Sattar. I'm working with UK University last 7 years. And I'm teaching other places such as University of Bradford. So my background, I'm qualified ACCA as well,
Yeah,
and
exactly.
I did MBA and MA in International Business Management, PGC, and I'm teaching various places. And today I'm with you. I hope I will meet your expectation. If you have any question, feel free and ask me, please. If you're not getting me, ask me. And my email address is anyum@ukversity.co.uk. If you have any question, please drop me email. Because your background is ACC as well, and you know the basic. Well done, great. So that will be easier to explain, and you can easily understand. So
Okay.
we'll start. We're doing ATHE Level 5 Extended Diploma in Accounts.
Yeah. Okay.
So today we'll cover our LO1. LO1 is allowed someone before starting uh, all the contents of this qualification and the unit are given. So aim of this unit, of course, we need to learn the reporting system, and we think ideas, merit, and distinction. So depends, where you want to see. So you know, so you need to be look around the value.
One second
Useful knowledge.
before you can, I should mention that I am hearing impaired, so I'm wearing hearing aid. So if you go a bit slower, I can easily understand everything.
No problem. Uh,
I am hearing impaired, so if you go a little bit slower, then I can easily understand you.
no problem. I will try my best to be. Thanks for mentioning me. And
Yeah. Okay.
we have three assessment criteria and three passing criteria. Yeah.
Yeah.
So
Okay.
passing criteria is a pass. You can get the grades as a pass.
Okay.
You can get merit, and you can get distinctions, which is around 90% your marks. Yes. So
Okay.
if you want to pass,
Hmm.
if simply you prepare financial statement with
Okay.
some adjustments, so that's you're hitting the passing criteria.
Okay.
If you want to be merit, you need to evaluate the purpose of preparing financial statement. Why we are preparing financial statement? Yes.
Yeah. Yeah. Okay.
It mean we can use the financial statement to make some financial decisions. Yes, based on reporting.
So basically, we make reports for the sole traders. I mean the stakeholders to understand the accounts, and so they can make their own evaluations about the business.
Yes, you're absolutely well done.
Okay.
And if you want distension, so you need to look around the stakeholders as well. Yes.
Okay, that's fine.
So today lesson will go through LO1, which is learning outcome 1,
Okay. Okay.
in which we'll go through be able to prepare financial statement for sole trader and partnership.
Okay, so that is your statement of profit and loss, your statement of financial position.
Well done, great. And how many types of statement you already mentioned too? How many types of statement we prepare?
I'm sorry, I didn't get that.
How many types of statement we prepare in accounts?
So we prepare a statement of profit and loss and other comprehensive income, a statement of financial position, a statement of cash flows, and if required, a statement of changes in equity.
We prepare 4 types of statement.
Yeah,
Statement
correct.
of income or profit and loss, statement of
Yeah,
financial position,
yeah,
statement of change in equity, and statement of cash flow.
yeah. These are the 4 main ones. There are also 2 more, which is not so much included. That is adding notes to the accounts to say why you're going to take this into the accounts, and I seem to have forgotten the last one.
Cash flow statement. Huh?
Yeah, the
So
cash.
some of the statements are not complete but carry on becoming crucial in a financial, like CSR and
Yeah,
sustainability or corporate governance.
yeah, okay,
So we have 1.1 and 1.2 assessment criteria, which we'll go through.
okay.
We have 3 learning outcomes, which we'll try to cover in 3 lessons. Huh?
Oh, okay,
And we'll go through all key definition, inductive contents, what we're supposed to be learn.
okay. So preparation of income statements, financial. Okay.
Do you know the current asset?
Yes, I have come across current assets in financial accounting in ACCA. So I know the basics of current accounts, but I have forgotten capital accounts.
No problem. Current asset means the asset which we can use within a 12 months. The current asset is as a short-term asset,
Short-term assets. Okay.
such as account receivable.
Account receivable, account payables. That.
Account payable is a current liability. Asset is anything we own, anything has economics value, we call asset.
Yeah, anything which is brings money to the business and asset. Okay, understood.
So current asset is mean
Hmm.
which we can use for 12 months, and no current asset you may be heard also known as a fixed asset,
Okay.
which, which we can use more than a year, like building, plant, machinery,
The
equipment,
machinery.
and we always calculate depreciation on non-current asset.
I'm sorry, I didn't get the last part.
We also calculate the depreciation on non-asset, which is also known as fixed asset.
Yeah, that is your property, plant, and equipment, which is your non-current assets, right?
Brilliant. Yes, you're totally right. Well done.
Yeah. Okay.
So capital account, it means the non-current asset account.
Capital
So
account.
it means non-current asset accounts.
Okay. Understood. Yeah. Okay. I remember. Okay.
And the current asset account, of course, current asset. Yes.
Yeah. Okay. Understood.
So which we'll go through. Uh, have you learned straight line and reducing method
Yeah,
depreciation?
I'm very thorough with both methods, how to solve the sums for that.
Brilliant. Straight line, same depreciation every year,
Yeah, usually
and reduce.
a percentage is given for a straight line method. You simply uh, depreciate the value over the carrying amount over of the asset, and then you subtract the the depreciation to get the carrying value at the end of the year.
Yes, for reducing balance method, you need each year carrying value, and then you need to calculate.
Yeah. Okay.
But the straight line, whatever was the cost value, you carry doing.
Yeah, basically straight line, the depreciation amount is fixed, but the reducing balance, the depreciation amount will change per year.
Excellent, great.
Yeah, okay.
Do you know the irrecoverable debt?
Irrecoverable debts, that is debts which that is uh, a value that has been put where you're bound to receive it, but at the end of the year you have not received it, so it becomes a bad debt.
Well done. That's all about.
Okay.
Do you know accrual?
Accruals. Accruals is a payment which you have to make in the future, but you still haven't paid for it yet.
Yes, there are two concepts. Accrual is also known as matching concept.
Yeah, matching concept.
It means every transaction should be recorded in the period when this happened, not on the basis of cash when we receive the cash.
I'm sorry, could you repeat that last part? I didn't get it.
Such as if we have a credit sales,
Yeah.
we should record credit sales. Even we get the money after 2 years.
Understood. Okay,
Accrual.
understood.
Other is accrual. Accrual can be income and accrual can be expense.
Okay, understood.
Accrual expense is mean payable. We not paid yet.
Yeah, you have made uh, uh, you're bound to pay for it, but you have not paid for it yet.
Yes.
Okay.
So then, like gas, electricity, we have used, but we not paid it.
Okay.
So we do expense debit and accrual credit,
Yeah. Okay.
which
Perfect.
I'll go through the slides separately. Prepayment.
Yeah.
Prepayment mean advance paid.
Yeah. Okay. That's really clear.
And these are all our stakeholders.
Yeah. Okay.
Okay. So we'll start. Welcome everyone. We'll start our lesson. So as mentioned, my name Anju, my email address. So we'll go through the difference between so purpose of the requirement of financial record while need to keep the financial record. Do we know the difference between sole trader and partnership?
A sole trader is someone who only runs the business, and he has the benefits of keeping the profits to himself. And while partnership is when two or more people combine together in a partnership in order to run the business, and the profits are split between them.
Yes, well done.
Yes.
So next we're looking the purpose and the requirement of financial record. Why we need to keep record.
Okay.
It's a legal requirement. By law we have to. It's the tax requirement. It's
Yeah.
internal control requirement.
Yes. Okay.
Then we pay financial report and we keep the financial record. Double entry bookkeeping.
Yeah. Okay.
Day book, we have purchase day book, sales day book,
Okay.
cash day book, and all these are the books known as a book of prime entry.
Yes, so basically from double entry bookkeeping, day books, ledgers, trial balance, all the values are imputed, and from this the financial statements are prepared from reading these values.
Yes, well done. Great, yes.
Okay.
We have a trial balance, we have a manual and computerized systems.
Okay.
The requirement of reporting, financial reporting requirements, sole trader, partnership, and company. They prepare financial statements.
Yeah. Okay.
All financial statement is not compulsory for sole trader and partnership, but compulsory for limited company. They must.
I'm sorry, I didn't get that financial statements area.
Financial statement is compulsory for limited company to publish on
Yeah,
public domain.
it's compulsory. Okay.
And we know already the financial statement we discussed, yes?
Okay. Perfect.
And stakeholders mean anybody who has any interest, they use these statements.
Okay. Understood.
Then we have two accounts we can divide into management accounts and financial accounts.
Yeah, this I have gone through before. It's there in my management accounting in ATHE. So this is fine for me.
Brilliant. So we dealing financial accounts, financial reporting, not management reporting. Yes.
Yeah. Okay.
Then first of all, we always in account we have a data.
Okay.
When we have a data, when we process it, record properly double entry, it's become a information.
Okay. Understood.
Then if we have a information, it can become a knowledge.
Yeah.
And then we can take action. Action means
Okay.
we can make decisions. Yes.
Yeah. Okay. Perfect.
Always in business, we need good information.
Okay.
Good information need to be all these qualities. accurate,
Yeah.
up to date, relevant. If we paying money worth of cost, it should be benefit should be more than the cost.
Okay.
Reliable,
Okay.
not fake news like Donald Trump saying.
Yeah.
Reliable,
Understood.
meet the needs of user.
Yeah, this is where the user should be able to understand the information that is presented to him, and so he can make a decision on based on information.
Brilliant. Yes, that's all about.
Yeah. Okay.
Next, we looking accounting consists of two elements:
Okay.
recording, transaction. Each transaction should be recorded.
Okay.
Then we can summarize the transaction.
So recording, summarizing. I don't understand the difference between both.
This recording transaction, summarizing mean total, like in shape of trial balance. Yes.
Okay.
So we can categorize them like current asset, current liabilities. Yes.
Okay. Perfect.
Then we can prepare the financial statement.
Yeah. Once the information is recorded and summarized, then we can make the financial statement out of the information. Is that correct?
Yes. Well done.
Okay.
That's all.
Okay.
Next, it's a requirement for limited organization and other organization as well to prepare the financial statements. Yes.
Yeah.
Financial
This is
account,
yeah. Okay.
but not management accounts. Yes. Its management are internal.
Yeah. Financial accounting is mandatory, but management accounting is only for managers and employees. See which position they stand in. The correct?
Well done. Yes, you're absolutely right. Yes.
Yeah. Thank you.
So next we have some standards like in India and the rest of the world. We have accounting standards. We have accounting bodies.
Yeah.
So accounting standard board in UK or rest of the world, they set the legal standard. But now we are using IAS, International Accounting Standards.
Yeah. This is clear.
So all accounts we are discussing and preparing under IAS 1.
Yeah. IAS 1. Yeah.
So that's all will be focused in our discussion.
Okay.
We also know the difference between sole trader partnership and company. In India, I think, if I'm wrong, Company Act 1984
Yes. Okay.
we follow, but in now we have a Company Act 2007,
Okay.
which is updated. So that's company two types: public
Yeah.
and private. It can be limited. Yes.
Yes. Okay.
Public can issue shares to the public.
Yeah.
They
Okay.
list in the stock exchange, but the private not listed in stock exchange. Private investor.
I think public limited company, they get their funding from the public, while private limited is while private limited, they get the funding from the people who start the business. Is that correct?
Yes, private investors.
Yeah, private investments to start a business. Yeah. Okay.
Then next we're looking accounting. Accounting is mean keeping record,
Yeah.
preparing financial statement.
Okay.
So where the accounting start? Accounting start with the transactions.
Okay.
Like when we buying and selling is a transaction. Yes.
Yes. Correct.
Then we have a primary document like invoices, like
Yes.
purchase order.
Okay.
Then we have a book of prime entry, like I mentioned, purchase day book, sale day book.
Yes. Okay.
Then we have a ledgers like purchase ledger control, trade receivables,
Yes. Okay.
sale ledger control. Yes. So
Yes.
these are general ledgers. Huh?
Okay. Perfect. Understood.
The purpose of accounting is all about record the correct record, yes, gather together, period, and prepare the statement as we discussed earlier.
Okay.
Internal control, of course, we need. Okay, this is transaction, cash sales, credit sales, sale return. All these are transactions. Primary documents, sale invoices, purchase invoices. These are primary documents.
Okay.
Book of prime entry. These are book of prime entries.
Okay. Perfect.
Okay, so next we look in.
Where is trial balance? Not here.
So no, trial and balance will come afterward because we prepare the book of prime entries, final figures. We can move to the trial balance. Huh?
Yeah. Okay. Okay.
Next we're looking dual effect. Every transaction have a dual effect. Yes, debit and credit.
Okay.
Organization is a separate entity. Yes, separate organization is a legal
Right.
entity. Accounting equation. Hope so. You already learn assets equal to liabilities plus capital, or we can call asset minus liabilities equal to net asset, and net asset always equal to capital.
Yes. Okay.
So that's my debit side, that's my credit side. So my right hand side equal to my left hand side.
One thing I thought assets minus current liabilities was equity.
Okay, doesn't matter current liability or non-current liabilities, all liabilities. Asset take out liabilities, it's become a net asset.
Okay. Yeah, yes. Okay.
Net asset always equal to capital figures.
Okay.
Then next we're looking. Have we heard about debt click? We keep the word abbreviation debt click to understand the debit and credit.
I didn't understand this debt thing. Sorry.
No problem. We're just going to explain in this class. So D stand for debit,
Yeah.
E stand for expensive, A
Yeah.
stand for asset, D stand for drawing.
Okay.
So whenever my expense increase, it goes on the debit side.
Okay.
Whenever my asset increase, it goes on the debit side. Whenever I draw more money from the business is the debit side. When
Yes. Okay.
increase. When increase is a debit, when decrease will be credit. Yes, opposite debit is a credit.
Okay.
Yes.
Yeah. Okay.
Click C stands for credit.
Okay.
L stands for liability. Liability goes on the credit side.
Yes.
I the income. C is the capital.
Yeah.
When
Okay.
these increase goes on the credit side, when decrease it goes on the opposite side, which is a debit.
Yes. Okay. Perfect.
Then you already know the debit and credit. Like purchase is a debit. If we have a cash purchase, cash is going out of the business, so cash is a credit. Yes.
So purchase is an expense, so it comes on the debit side, while cash comes on the credit side because goods for resale.
Yes. So because the cash, no, we are buying things for cash. So purchase is a inventory, raw material, stock we are purchasing, which is debit. We are
Yes.
using cash to buy. Cash is an asset which is decreasing. We're doing credit.
Okay.
So normally we use like this. When asset increase, we do debit. When asset decrease, we do credit.
Yes.
When
Okay.
liability,
Understood.
so we use double entry bookkeeping rules. We know the statement of financial position. It shows the whole accounting equation. It shows asset, it shows liability, it shows capital.
Okay.
In profit and loss, it shows the revenues, which is also known as a sales. We minus cost of sales, it's equal to gross profit.
Yeah. Sales minus cost of sales is gross profit. Okay.
And from the gross profit, we minus other expense, or we call overheads, and we get
Yeah,
the
and we
profit.
no net profit for the year. Okay.
Then that profit can be before tax, after tax.
Yeah. Okay.
So core accounting, and we can use some software as well to, like, have you maybe heard about Sage?
I'm
Sage
saying
accounting
this I
software.
have this I have not heard before.
Okay, this we use in account software. So these are all the terminology: account payable, account receivable. We can do analysis. We manage cash. Yes, we can do
Yes.
payrolls through the software as well.
Yes. Okay.
I already mentioned everything we are preparing in the IAS1.
Yes. Okay.
So IAS1 is prepare all the financial statement. IAS16, where we look property, plant, equipment, and depreciation.
Yeah. Okay.
Depreciation, state line,
Yeah.
and diminishing, reducing
Uh,
balance.
I'm sorry, I didn't get you.
So we discussed depreciation methods, state line, and
Yeah. Okay.
reducing. That goes under IAS16.
Yeah. Okay. IS 16 I remember, and IS 2 is for inventories. Okay.
So that's all. These are the standard and terminologies. Like in UK we call SSAPs. In international we call IAS. Yes.
Yeah.
In UK we called FRS, Financial Reporting Standard. In international we called IF,
Okay. Understood.
International Financial Reporting Standards. Yeah.
Okay.
Then we have accounting concept, which is very crucial to go through.
Yeah. This is quite easy for me.
Brilliant. This is you maybe learn about qualitative characteristic of financial statements. Yes.
Yeah. Right.
Going concern, it means the business will carry on as normal.
Yeah. So it's basically that the business will continue to operate in the future and get the and get the benefits out of it.
Yes, good.
Okay.
So accrual, which I already discussed, income and expenses must be matched, must be recorded, yes, in the same period, not basis of the cash.
Yes. Okay.
Like is the example, energy bills. Bills may be coming in different period, but it's related to whichever period we should record.
Oh, understood.
Then next we're looking, these are called qualities of financial statement. It should be contain these qualities. Relevance, every transaction, those are relevant to that period should be included.
Okay.
Comparable statement, always comparable. Like every year we prepare 12-month statement, we can compare with the previous period, yes, and different
Yes.
businesses.
Yes. Got it.
Verifiability, whatever we are saying, it should be verifiable. Yes, we saying 10 million asset we have, it should be in our warehouse as well.
Yeah. Got it. Yeah. Should. Yeah. Got it.
Faithful, everything should be true, yes, without any errors, not putting one extra zero there.
Yeah.
Intention.
But there have been some cases where companies deliberately alter the accounts to provide a good picture for themselves.
Some company they use creative accounting, under expense our income, yes, increase and
Yeah.
decrease figures. So that's
Yeah.
creative account,
Yeah.
which is
Okay.
illegal. Understandability. We need the figure should be understandable, simple language, yes.
Yeah. So that users can understand and make decisions. Okay.
Timeline, it should be timely after every 12 months should be available, yeah, public domain.
Yes. Okay.
I copied some links. If you want
Yeah.
to learn more accrual and prepayment, you can copy this link, yes.
Yeah. Okay.
So you can, I'll show you. Is exactly like ACCA we teach here, ATHE qualifications as well. In India, they just started now.
Okay. Okay.
So you can copy and then you can play. It's a self e-learning. Huh? Like you can copy and you can look around. Yes, what is accrual and prepayment? Few activities.
Okay. Perfect.
And same incomplete record where we say something are missing, how we can find. Huh?
Okay.
Next, evaluate why investor they looking financial statements that will help them to hold and determine, yes, the value of the company.
Yes. Okay.
Lender they want to see how much money they already have borrowed, how much they are they have ability to pay us back or not.
Yeah. So you have to basically match the income and expense with the payment, whether it's received or sent. Is that correct?
Yes, so because
Okay.
stakeholder make the decision based on the financial information.
Okay.
What is meant by stakeholders, which we discuss. Bookkeeping, we discuss bookkeeping is recording transaction, but accounting is preparing, yes.
Yes. Okay.
So profit and loss, always, yes, you have profit sales minus cost of sales, yes, other expense equal to profit.
Uh.
All,
Yeah.
all the pro forma, how look like financial statement, yes, assets,
Yeah.
current asset minus this format, core benefit of software state line and dimensioning, which we already discussed. So what you can do, if we want to see the company's financial statement, we can copy this link here. We have two supermarkets in UK. One is called Tesco, one is called Morrison.
Okay.
So we can see their financial statement, how look like.
Yeah.
I can copy the link. I can go through. This is 2019, so I can go through all. This is a statement. So there is an income statement, there is a profit and loss, all the facts and figures. Yes.
Yeah. Okay.
Like here, we'll see. Yes, cash flow there. Yes, change in equity there. Group mean they have so many subsidiary companies. This is the balance sheet. Yes.
Yeah. Okay.
So we can easily see what's happened last year, this year figures. Huh? Increase, decrease. Like here, we can see. Yes, 52 weeks. What happened? They increase or decrease? Huh?
Yeah. So we can compare between both years and see where there's a difference, and explain the difference.
Yes, and we can compare within a company, or we can compare with the competitor as well. Yes.
Okay.
So we'll keep up to here. So that's all today lesson. Yes. So today lesson we discuss about the financial statement. We discuss about accrual and prepayment. We
Yeah.
discuss about double entry bookkeeping.
Yeah.
We discuss about bad debts, and we discuss about the user of financial statement. Those are the stakeholders, and we
Yeah.
discuss difference between financial and management accounts, and we
Yeah.
discuss about the reporting standard IES 1 and
Yeah.
IFRS International Financial Reporting Standard. So that's all today. Any
Yeah.
question?
Yeah. The tax one, I've not come across it. So could you little bit explain about the tax relevance to this?
Tax.
Yeah.
So we'll go through this. Because today lesson we discussed about just
Yeah. Tax. I understood everything else except the tax area. So this is
no
a bit confusing.
problem. So if I'll go back to the qualification, yes,
Yeah.
everything will be on Moodle. Huh? So we're doing unit 1. Okay. So today lesson really we discuss about LO1, and
Yeah.
we discuss about inductive contents. Yes.
Yeah.
So
Okay.
we discuss inventory. Yes. IES 2. We discuss
Yeah.
state line. We discuss provisions. We discuss recording, classification. Yes. Asset liabilities, and we discuss tax is all about
Yeah.
uh,
Okay.
tax. Normally we charge on the basis of the profit, but something like depreciation is not allowed for the tax purposes. So we have to add it back to calculate the tax. Yes,
Yes.
because depreciation we can set ourselves how many percent we want.
Is this linked to deferred tax?
Yes, deferred tax as well. Yes, you're right. We can
Yeah.
look around the corporation tax. We look around the every country have a tax rule, so we need to follow the tax rule. because in the tax capital allowance is allowed, but not depreciation. So depreciation we should add it back, huh?
Yeah, depreciation should be added back. Yeah, okay.
Yes. So because depreciation, I can put 20% depreciation. I'll say my profit is less now.
Yeah.
Tax office saying no, you're not allowed it, huh?
Yeah.
So
Okay.
they gave the rules, huh? We have to follow the rules. We can go through in the further learning outcome. We have some, elements where we'll discuss more tax in detail, huh?
Yes. Okay. Now I understood.
And we'll go through ratios and various other things, huh?
Yeah. Okay.
Okay, we'll keep up to here. If you have any question, please feel free, drop me email. I'll try my best to get back to you as soon as possible, and hope so. I'll speak to you. I'm not sure you have a lesson tomorrow as well. Yes, I think so. No, we'll check. Huh? So
Yes. Okay.
I will speak to you soon. Huh? So have a nice time. Huh? In case if any question, feel free, drop me email. Huh? And
Yeah. So
you already know the basic accounting very well, so is no worries. Huh? More
yeah.
your written assignment, we'll go through assignment brief as well. Huh?
Yes. Okay.
So have a nice time. Huh? Enjoy.
Okay. Thank you.
Hope so weather will be nice there. Huh?
Yeah. Thanks.
Okay, great. Thank you. Bye-bye.
Yeah. Bye.